Good morning, guys. The Delta variant still weighing on the markets. You can see this effect on the cyclical sector. So take a look at what we're seeing today. Earnings great for some of the big retailers, but banks weak, energy weak, industrial. So there's your cyclical sector a little bit on the weak side. Tech is flattish, consumer discretionary better. So there's a growth holding up okay. Tech continues to hold up despite these concerns about the Delta variant. A lot of peak everything stories out there. Target is getting caught up in the peak everything story. What does it mean, peak everything in your Target? This is what it means. Take a look at the revenue growth here for Target. You see $78 billion in 2019. Look at that huge jump up in 2020. There's the big push up that Target had, and had the same thing in earnings. 2021, still up. You see 2022, a lot more moderate. This is the peak everything story. It's not that anything's wrong with it. In fact, the numbers are good, but the rate of change slows dramatically. It's the same thing for the earnings situation. They had a big jump up in earnings. Their rate of growth in their earnings next year is going to be slower, much slower. So here's the big problem. Nothing wrong with Target. It's just, it's up 44% so far this year. It's way outperforming the S&P 500. Put up the stock chart there, and it's 21 times 2022 earnings. That's very high for Target. Look how much it's outperforming. That's the white line it should be Target up there, but it's Target's outperforming rather dramatically. So the important thing is 21 times forward earnings for Target. And now you've got a situation where it only trades historically 15 or 16. Everyone's saying, how much better could it possibly get? Now, maybe it warrants a higher multiple. The guidance was pretty good. Overall, there's Target versus the S&P. You see Target outperforming there. Maybe the multiple is justifiable because they're giving better guidance. I don't think so. The earnings are still up, but not so dramatically. As for Delta variants in the stock market, there is evidence it's starting to change consumer behavior a little. Look at the data points. Retail sales a little weaker, consumer sentiment, builder sentiment a little weaker, the China growth numbers. So there's a little bit of a global story here associated with Delta variant changing consumer behavior. The big question is, how much will it change the second half growth assumptions? When are people going to come out and start talking about that? The problem is we don't know. It's really too early to make those kinds of changes right now, although we can see the trajectory and where it's going. As for why the stock market is at record highs, how could we be here? We're having huge problems with the Delta variant. This is why. We have record earnings, $52 for the second quarter. We're going to do north of $200 for the year. That is an all-time record, and it keeps going up for the third and fourth quarter. Profit margins, 13.6. We have never seen a profit margin this high at 13.6. They're historically 9, 10, 11%, 13.6. Heavens. This is why the stock market is at a new high. Record earnings and record profit margins. As for the end of the second quarter, people are just still standing around with their mouth open. They were just astonishing. 88% beat, 87% beat on sales. You saw these numbers many times. And the important thing is they beat by 17, 18, 19%. Normally they beat 3, 4, 5%. And Q3 has low expectations. They're going up, but they're not going up very fast. They're going to beat the numbers again in Q3. Carl, they're going to likely beat them in Q4. And so that's the best thing the stock market's got going for it right now. Fairly low expectations. They're going to keep raising these numbers because people are underestimating the extent of the economic growth. And what Delta's doing is it's throwing a little curveball into just how much can we keep pushing up those third quarter estimates. Carl, back to you.
All right, Bob, thank you.